Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's jump in. We begin our review of the global economy with key releases in the US, Europe, China, India, and Japan. Global market sell-off that originated last week reverberated on Wall Street on Monday as investors recalibrated their economic growth and corporate earnings outlook. The S&P 500 index and the Nasdaq Composite plunged as much as 6.5% in Monday's trading, but managed to close higher by the end of the week. Earlier in the week, market sentiment reversed sharply after key economic indicators suggested weakening economic activities and labor market expansion, suggesting that the economy may be losing steam faster than previously anticipated. The sudden shift in the economic narrative caught investors off guard and set in motion a decline on Wall Street last week, which rippled to Asia and Europe with heightened amplitude. On Monday, Japan's Nikkei plunged 12%, the largest point decline in the index's history and the second largest fall in percentage, after the Bank of Japan lifted rates that contributed to a sharp rebound in the yen. But as the week progressed, calmness returned to global markets and investors shifted their focus to the latest economic updates and domestic corporate earnings. The U.S. international goods and services trade gap shrank in June, the Commerce Department reported Tuesday. The trade gap shrank to $73 billion from the revised 20-month peak of a $75 billion deficit in the previous month. Exports increased 1.5% from the previous month to $266 billion, and imports rose at a slower pace of 0.6% to $339 billion. Exports advanced to the second highest on record, driven by strong demand for aircraft, automotive vehicles, and petroleum energy products. Across the Atlantic, calendar and seasonally adjusted goods export from Germany in June declined to 3.4% from the previous month to 128 billion euros, and goods imports rose 0.3% to 107 billion euros, resulting in a trade surplus of 20.4 billion euros. The euro area retail sales declined in June after rising for 3 months in a row as consumers battled higher prices and limited spending to basic needs. China's exports and imports rose 7% in July, suggesting strong demand for its products and improving domestic demand conditions. China's trade surplus shrank from a year ago to $85 billion, but eased from $99 billion in the previous month. The Reserve Bank of India held its key lending rate at 6.5% for the 9th month in a row, and the central bank left its inflation outlook unchanged at 4.5%. Among the other economic global news, home prices in the UK rose at a slower pace to a record high, German factory orders plunged 11% amid weak domestic demand, and France's jobless rate eased to 7.3% in the second quarter. China's inflation was positive for the 6th month in a row and accelerated to a 0.5% rate, but producer price inflation declined for the 22nd month in a row to 0.8%, suggesting persistent deflationary trend. Let's review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury fell below 4% for the second week in a row after a string of economic reports signaled weakening economic conditions. Crude oil prices rebounded 4% to below $77 a barrel and halted a 4-week slide following escalating tensions in the Middle East and easing of recession fears in the U.S. Natural gas prices in Europe jumped to an 8-month high of €40 per megawatt hour as traders weighed growing conflict between Ukraine and Russia that could lead to supply disruptions. The euro stabilized near $1.09, benefiting from the general weakness surrounding the U.S. dollar amid growing worries about the U.S. economic slowdown. The yen strengthened to 145 against the U.S. dollar after a chaotic week of wild swings in the stock and currency markets that saw the yen rise to an 8-month high of 141 against the dollar. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite recovered from Monday's sharp losses amid economic slowdown worries and deteriorating labor market conditions. European markets advanced after a week of elevated volatility following worries of a U.S. economic slowdown. The Nikkei 225 stock average recovered from a historic single-day plunge earlier in the week after currency traders were forced to unwind the yen carry trade following the unexpected rate increase by the Bank of Japan. Hong Kong index rebounded after consumer price inflation was positive for the 6th month in a row, signaling improving demand conditions. Indian market indices overcame global market volatility after the latest batch of earnings indicated positive trends in consumer spending and government spending. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Expedia Group, the online travel agency, reported better than expected revenue and earnings in its latest quarter. Paramount Global, the media company, reported better than expected earnings per share in the second quarter, and company also announced its plan to cut 15% of its U.S. employee staff ahead of its merger with Skydance Media. Eli Lilly reported better than expected second quarter earnings, and the company also raised its full-year outlook due to the strong demand for its obesity drug and diabetes treatment. Zillow Group, the real estate platform operator, reported better than expected second quarter results. Airbnb plunged 14% after the online booking platform reported a weaker than expected third quarter outlook. Wynn Resorts, the casino and resort operator, reported weaker than expected revenue in the second quarter. CVS Health, the drugstore chain operator, reported better than expected second quarter earnings, but the company lowered its full-year net income outlook, citing higher costs. Puma decreased 11% after the athletic wear maker trimmed its full-year outlook. Vodafone Group, the wireless telecom operator, launched its €500 million stock purchase. WPP, the advertising service provider, agreed to sell its majority stake in FGS Global to KKR at its enterprise value of £1.7 billion. Glencore shelved its plan to spin off its coal mining division despite gaining support from its shareholders. Uber increased 8% after the ride-hailing service provider reported better than expected second quarter results. Yum China, the Shanghai-based franchise of Pizza Hut's and Taco Bell fast food stores, reported better than expected quarterly results. In the U.S., investors are looking forward to the release of consumer price and producer price inflation reports and retail sales update. July's consumer price inflation is expected to hover around 2.9%, and core inflation is estimated to stay near 3.2%, higher than the Fed's target rate of 2%. Retail sales in July are estimated to rise about 0.3%. On the earnings front, Cisco Systems, Walmart, Applied Materials, and Home Depot are scheduled to release their earnings. The euro area's second quarter GDP expected to grow by 0.3%, according to second estimate scheduled to be released next week. And the international trade balance in the Eurozone is expected to show a modest increase in its surplus. In the UK, investors are looking forward to the release of second quarter GDP growth of 0.6%, and the jobless rate is estimated at 4.4%. In Asia, China is set to release updates on retail sales, fixed asset investment, jobless rate, and housing prices for July. India's inflation in July is expected to drop below the 4% target set by the Reserve Bank of India for the first time in several months. Japan's second quarter GDP expected to show a slight pickup from the first quarter, driven by an increase in exports and higher domestic demand for industrial goods. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfund.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next